The markets rising on Wall Street in response to new data suggesting historically high inflation may be cooling off. That report out today from the Bureau of Labor Statistics, and it's showing the consumer price index last month was 6% year over year. That's in line with economists' expectations and a decline from 6.4% last month. All of this coming as the government works to also contain the fallout from that collapse of Silicon Valley Bank and the second largest bank failure in U.S. history. ABC News business correspondent Alexis Christoforous joining me now for more. So, Alexis, let's start with a read on inflation. What do these numbers mean for Americans right now that are worried about the price of just basic essentials?
You got it, Kira. And, you know, when you look at the headline number, inflation at 6%, that's still a really hot number. But I guess the good news is it is cooling down from the prior month. We saw higher prices for just about everything. We saw inflation overall up 0.4% month over month and up 6% year over year. But when we dug into the report, we found that shelter, which really makes up 70% of the consumer price index, up 8% in just the past year. We're still getting stocked at the grocery store. Prices up double digits. Household furnishings up 6%. But gas and used cars, really the only two major categories that saw a decline in prices. So clearly the Fed's work is not done when it comes to reining in inflation.
I don't know about you, but already twice within the past 3 weeks, my husband has actually stopped to say, how much are these eggs? And that is a true story because we cook a lot of eggs in our family. And so we are just on a daily basis seeing things that we kind of took advantage of, right? Didn't really look at how the prices are increasing, and they are. So as we all are thinking about that, every time we go to the grocery store, what are the next steps, you know, for the Federal Reserve, Treasury, even the White House? Could we see them do more just to try and protect customers and everyday Americans trying to get by?
You know, really, when it comes to high inflation, the Federal Reserve has the tools, and there aren't many of them. You know, we've got higher interest rates. That's the way the Fed has been trying to fight high inflation. But now it needs to rethink that because we had the collapse of two regional banks in just 3 days. High interest rates were really the culprit there. So they want to tread carefully. We know that the Fed said that they're going to make, and the government has said they're going to make those depositors whole at those companies. But beyond that, we know the Justice Department and the Securities and Exchange Commission came out today and said they have begun their own separate investigations into the collapse of Silicon Valley Bank and Signature Bank.
All right, and President Biden yesterday actually blamed the Trump administration for rolling back bank regulations, including some in the Dodd-Frank Act that passed in response to the 2008 financial crisis. You've talked a lot about that. What was that rollback exactly, and do you think it has contributed to these regional bank collapses?
Once the financial crisis happened over 10 years ago, there were bank reforms, new regulations put in place. One of the things they did was they made all banks go through stress tests to make sure that they had enough money on hand in case there was an emergency, like a run on the bank, a deep recession, high unemployment. And in 2018, a lot of the smaller banks actually lobbied for some of those regulations to be rolled back. That happened during the Trump administration. They said that these regulations were just too burdensome and that they were not as important to the overall banking system as a larger bank like a Bank of America or a JP Morgan Chase. So those banks, including Silicon Valley and Signature, did not have to go through these stress tests. But this week, President Biden said he wants to press Congress to toughen those regulations once again and make stress tests part of the regulation process for all banks, regardless of size.
Now, earlier today, Meta, the parent company of Instagram and Facebook, announced it's going to lay off another 10,000 jobs and eliminate another 5,000 open roles. So you tend to ask, you know, really, are any jobs safe right now?
Well, I think a lot of what's happening to Facebook's Meta is very specific to that company. I mean, they're experiencing a drop in digital ad sales, and a lot of companies in the social media space are, which is why we're seeing so many of them announce layoffs. But also, Meta has been trying to pivot its business over to the metaverse. That has been a slow and painful process for investors and also for employees there. And Mark Zuckerberg, the CEO of Meta, said 2023 is the year of efficiency at the company. So there's restructuring going on there, and it's not something new. I think that you're going to see more of it, not only at Meta, but other technology companies in the weeks and months ahead, Kira.
All right, Alexis Christoforous, thanks so much, as usual. Appreciate you getting us through it.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.